The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show like we usually do, taking a look at the FTSE and the DAX. We'll start out with the DAX. As you can see, we made a lower low in the DAX. We did not do that in the FTSE, so that was the better one to buy. And of course, they're having a lot of news over there, political, just like we are having here. We'll put up the FTSE here so you can take a look at it, but it had higher bottoms, which means it was still in an uptrend, so that would have been the one that you would probably be looking at. Now, yesterday we talked about the fact that the stock market did not give back very much at all. 250 points overnight, quickly last night that they gained it all back, and now we're approaching new highs in the NASDAQ, and also we've already made new highs in the E-mini S&P. There was nothing in those charts yesterday that made it look bearish. Now, we do have the solar eclipse coming in here with the new moon today. That usually means something very, very important. It's also what Norm Rinsky described as a super full moon, because we have perigee coming in at the same time, and then they also have the movement of the Earth around the ecliptic too. So all that should mean for a pretty good change of trend. The 200 billion of new tariffs doesn't seem to mean too much right now. There was a news announcement this morning that the Chinese were going to cut back on their importing of soybeans. Well, they're going to have to buy them from somewhere, folks, that's for sure. So we'll see. They're going to continue eating, but we are very, very oversold in that soybean market. And we're right over one of these major lunar things, so it's going to be really interesting. Yesterday, we talked about that December corn down there at that 354 level. We hit that yesterday, and we had a little bit of a rally. We're over this major cycle. Now we're going to find out whether it works or not. Probably the safest thing to do would be to, wait for the bottom to come in and then make, buy the first pullback. Because believe me, folks, the longs are, if there are any longs left, are totally decimated. And so anytime the market starts to sell off after a rally, as you can see, they head for the woodshed. So these markets are not going to go straight up from this level. The weather is actually pretty good. We got hot weather, but we also have some rain forecast. So things are looking good as far as the crop is going on here as of July the 12th. This happened to be the birth date of one of my very, very dear friends, Jay Cross, who worked with famous Hofstadter. He was the first computer programmer that they hired at Commodity Corporation way back in 1964, 65? I forget which year it was. It was a long time ago, but we lost Jay the same day that the OJ chase was going on 20 years ago. He was killed in an automobile accident down there on his cotton farm down in Memphis, Tennessee, that we used to visit all the time. Anyway, we miss him greatly. Now, continuing on with what I would like to do, and that is we, look at some charts, of course, as we go through here, but the real key to looking at some of these markets is to look at them, from the aspect of that 9-inch cycle, that from ear to ear. In other words, if you get the man right, the rest of the world will be right. But if you'll just think about this, that it's that how you think and what the market, it's not what you think about the markets, it's how you think. And that's the real key to this. Now, one of the things that you folks have access to, I don't think you use it very much, and that is Adrienne Togaray with Trading on Target. That's tradingontarget.com. She has an attitude survey that is really exquisite, and I believe she offers it free. So if you want to check what your assets are as far as psychologically, drop her an email and see what she has available, because she gives some really great stuff out. Some of it is free. We're going to be doing a webinar together sometime around the September 26th, 27th, 28th, I believe. So we'll be doing that. But before that time, go there and take a look. I'm going to try to have her on as a guest tomorrow, because since Mark Douglas passed away, she's who I use. I use Paula Douglas also, because she's carrying on the torch of what Mark did, because she worked with him, for 30 years side by side. So she knows quite a bit about it too. So those are just a few of the things. Now, one of the things that Mark worked on that was really great is he had an attitude survey, and anybody that he interviewed for his books, had to go through that. This was professional traders, and well, he didn't work with neophytes very often, but the professional traders actually enjoyed it. And, he would share the results and, where they stood, along the line. But one of his favorite, I think that was the very first attitude that he had is do you need to know what the market is going to do next in order to make money? And in the professional trader, almost all of them answered that as no, because you really don't need to know, because you don't know. That's the unknown. So the only thing you have to think about is react to what you're seeing. And here's one of his other one. I'll just give you a few of these because they're really quite fun. Sometimes I find myself thinking there must be a way to trade without having to take a loss. Yes or no? Well, the answer to that is no, because trading involves losses, folks. It's like breathing. You got to get used to it and shake it off when you take the losses. And sometimes you're going to lose 4, 5, 6, 7, 8, 10 times in a row. You don't know. And on the other side of it, you could win 10 times in a row. It's all based on probability. So you have to have that mindset that you've got to be able to get back in the game. It's much like playing golf. When you watch a tournament on the golfing network, or even tennis, if a guy does a bad shot, they don't throw their clubs into the water. They move on to the next hole. So that's what you have to do when you're trading. You got to move on to the next thing. Losses are unavoidable component of trading. That's 100% one, folks. If you think a person can trade without losses, don't walk away from that person. Run away from them, because losses, everybody has them. And the main thing is you have to be able to define your risk. And that's the whole thing of what trading is all about. It's to define that risk. It's the risk-reward equation. And the only thing that you can control in the risk-reward equation is the amount of money that you're going to risk. That's all you can do. If you remember, just the other day, we were talking about the euro. And as you look at this, you'll see here the euro went right up to this area that we were looking at that 78% level. It came in at that 117.90. We got as high as 117.95. We're now trading, we're down more than 120 pips from that level, and we should be heading down towards, another level. Now, that doesn't mean anything other than when you look at that chart, you're saying, okay, what do I have to do to see if, if this thing is going to move? And what you have to do is to look at what's going on, with the commodity itself that you're looking at, because how much do you have to risk to see what's going on? So if there's several ratios coming together or patterns coming together at the same time, that quantifies, what your risk is. So if you can make it within $300 or $500, that's certainly an acceptable risk. Most people lose because they put their stops too close. They use a 10 pip stop, an 8 pip stop, a 5 pip stop. That's just the normal flutter of the market. And when you're talking about $1 trillion market like the euro, it's not, that's not very much. So if you watch the euro trade and follow it, you'll learn a lot, because that's real cash moving the market. So we're going to take a little break here, pay a few bills, and then we'll be right back to talk a little bit more about the psychology, and then we'll get into some of these markets because we got some big moves happening. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to continue on about some of the things that Mark worked on when he worked with some of these famous traders. A couple of the things in the attitude survey that were really cool. And one of the questions was, would you even bother putting on a trade if you weren't sure it was going to be a winner? And the answer to that was always 100%. They always believed that they were going to win, even though many times they didn't. And the next one was really one that I really was surprised at, and that is the more a trader learns about the markets and how they behave, the easier it is for him or her to execute his trades. Do you agree or disagree? And almost all of them disagreed, which was really a surprise to me because they really didn't care. And the reasoning that they gave when they talked about this particular question is, it's not about what the market's going to do, it's about what you're going to do in reaction to the market. So it get back to that old thing, it's not what you think, it's how you think. So these were just some of the things that he went through with those attitude surveys. And as I mentioned, if you want to do an attitude survey like this, contact Andrea Togare, because she has a really a terrific one that really helps you. And you'll be surprised at maybe, some of the things that, that you'll get back on it. So we'll just pay attention to that as we go through. We're going to do some of this each day, to try to get you in the realm of thinking about what you're doing and worrying about that big 9-inch cycle, the one between ear to ear that helps to determine whether you're going to be right or wrong. So that's the main thing that you want to look at. The other thing that you've got to realize when you're trading, if you find that when you lose, you feel bad, and when you win, you feel good, you should feel good whether you win or lose, because you got to get used to the losing part, because don't let that affect you. It's not what you think, it's how you think. And remember the words of, Anthony Robbins, about your expectations. All of your frustrations, in your life and trading all come because your expectations were unfulfilled. If you're waiting for soybeans to rally and they don't rally, that's an unfulfilled expectation. So you have to get over that very, very quickly, for sure. Now, we had an interesting thing happen last night in the platinum. Of course, we made new lows in silver, and we almost made new lows in gold. But if you'll take a look here, at the platinum market. Let's just get this up here so we can take a look at it. Yes, it's trading on target, David. Thank you very much. And she's a wonderful lady, and she knows this stuff. She worked with Van Tharp for many years. In fact, I think they were significant others at one time. I have to go back and remember that. That's more than 30 years ago. But she really knows. Yeah, I'm sure. I'm 100% sure of that. Well, let's see, 92% sure, something like that. But but anyway, she does know the business very, very well. She's been in, all of the circuits for speaking for the money shows and all the others, and she's been on the tube and stuff. So she really knows the business and the psychology of trading, a great deal. So, give it, it doesn't cost you anything. Just give her a jingle and see if maybe you don't need it, but if you do, take a look at it, because the mental part of this is very, very important. No question about it. In fact, I'm thinking once we were in Las Vegas at one of the conferences back in the late 80s, and Bryce Gilmore and Mark Douglas and Rich Anderson, myself, Bob Miner, and Robert St. John, the big bond trader from Chicago, was there, and they wanted to play a hand of blackjack for $1,000, and they couldn't find an empty table because it was so busy. So Bryce went over to the floor manager and said, "We want to play a hand of blackjack for $1,000, and it's eight hands on a table." And say, "We'll put up $8,000." And there's only 7 of us in the group, and Mark and I and Rich Anderson ain't gonna put a penny down on a blackjack table. So the 5 of them ponied up the $8,000, and they paid $1,000 a hand in an 8 shoe box, and they dealt everything out, and it was really amazing. There was one blackjack in those 8 hands. I believe Robert got that, and then the dealer had a king in the hole, and so it was really tough. And so I think Bryce had a terrible hand, like a 14, so he stood on the 14, and the dealer turned over a 6, and then the busted. So they made the $8,000, but that was it. They picked up the money and left, and so. That was one of those crazy things that they did during that time. I wouldn't bet $1,000 on a blackjack hand if I had the cards ahead of me. Okay, let's move on here to a couple of things. I've talked a little bit about this platinum. That's telling us that gold could be getting ready. I still think we got a chance one more time, but we're right over this big cycle thing, folks. This is a big thing with this partial solar eclipse that we have today with the new moon, and with perigee coming in at the same time. So this should be something pretty big. That is true for the stock market too. So, we've had a pretty good move. We're trading up at around that 2790 again. The S&P has not made new highs. I thought that it had earlier this morning. It has not, nor has the Dow Jones. People keep asking me, well, a couple people, they dropped me an email, what's going on with these tariffs? Folks, I don't know, and neither does anybody else. I'm just reacting to what the market's doing. I mean, it didn't act very bearish yesterday. I mean, it's down 250 points on the opening, and it ends up being down, what, about 110 or something? I mean, it took most of it back, and the NASDAQ took more than 2/3 of it back. So it's not acting bearish. When it starts acting bearish, maybe that'll be the sign that it's ready to go down, but it hasn't done that yet. And we're right over this big cycle. I think this is we've listened to Norm talk to us about it yesterday, and it should be a big one. So we're going to find out if it is or not. If it isn't, I guess we won't have Norm on anymore, but of course we will, but we'll see how it acts anyway. But anyway, you'll have a one-day orb, and since we're coming into Friday, and it's going to probably be an up week unless something really dramatic happens today, we'll have some pretty good indications of what's going to happen by the first of the week. So we'll watch what is going to mark. David White just talked into something about Jesse Livermore. It was the change in my attitude that was of supreme importance to me. It taught me little by little the essential difference between betting on fluctuations and anticipating inevitable advances and declines, between gambling and speculation. And I agree with that 100%, because gambling and speculation are 2 different things. Gambling, you don't have any control over, folks. It's based on the toss of the coin, the blow of the whistle, the toss of the ball, the spin of the wheel, the turn of the card, the roll of the dice. You have no control once that starts. With speculation, you can get in and get out within a second or two, and all you pay is that small amount of commission. And you also have control over the amount of money that you can bet. You can increase your bet at any time. With a gambling event, you can't increase your bet during the event. You have to wait until the event is over and get to the next event before you can do that. And so there's a lot of different things. I have several times where I've had to talk to parents of young traders because they believe that, speculation was gambling. And it takes a while to talk to them about that. They have to look at the book by, Thorpe, not James Thorpe. What was Thorpe's name? Oh dear, I can't think of his first name. But he wrote the book Beat the Dealer, and he still is. He's a hedge fund manager down in Orange County, Edward Thorpe. And, he's very successful. He went from, counting cards to, running a hedge fund, and that's pretty much what he does. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to talk just a tiny bit here about the British pound. One of the questions that was posed during the break here was about these lunar cycles, and that is how sensitive are they? When I first wrote the book with Ruth Miller, the Astral Cycles, A Trader's Viewpoint, we looked at these going back over 100 years and looking at the stock market and the grains and stuff, and it gave a one-day orb, and that means it's one day before to one day after. So it's a 3-day window. In other words, today is the solar eclipse. It could have happened on the 11th, the 12th, or even the 13th, because but usually when you have a super full moon, like super new moon, like this one is, with the perigee coming in at the same time, it's usually on that day. So whether that's going to be the day or not, I don't know. But historically, you have to give it a little bit of time. That's where the patterns come in, because if you're setting at these pattern spots, you want to be, watching them real closely. And boy, we are right over major buys on November beans and Christmas wheat, and also on the Christmas corn. The question is are these tariffs going to amount to, even more to the downside? Frankly, I don't know, but nobody else does either. So that's the key to looking at it. It's the amount of money that you have to risk, not the amount of money that you think you can make. You got to keep that in mind. There's one other pattern here in the foreign exchange realm that looks pretty interesting. We focused on this in the newsletter this week when we were trading down at that 110 level. You notice here we've got a really strong move here from 110. We got up to 112.50 this morning. We're trading around 112.27 right now, but we've completed the 78% rally from last October. That was, you'll notice we had that triple top up there at that 61% level. So we are at a really critical level here in this yen versus the dollar. Now, many times the stock market will run with that dollar yen trade, and maybe that's going to be the thing that'll turn it. But this is a really interesting pattern here that we have in the dollar yen this morning. Whether it's going to turn it or not, we'll have to wait and see, because remember, when these patterns fail, they go a long way. And we've been up, 6 or 7 days in a row in this one, so it's extremely overbought. The question is this going to turn it? And we don't know the answer to that at all. Let me take a quick look here this morning to see what the markets are doing here on the opening, because that's always a real interesting thing to watch. We're getting pretty good. The NASDAQ is almost back to that magical 7300 level, so we'll keep a close eye on that. Crude oil still coming down. We talked about that crude oil, being bearish several times because of the divergence that we had between the heating oil and the gasoline. That tells us we're probably heading down towards $66 per barrel is what it looks like, from just looking at some of these things early this morning. The euro has come down to some pretty good support. We talked about that just a little while ago. So there should be some pretty good support around that 116.50 level in the euro, but we'll have to just wait and see, what's going to happen. We had the Dow was up about 200 points at one time. I think we're up about 180, 185 right now, but still very early. We're in the midst of amateur hour, that first 45 minutes. So give it a little bit of time, to see whether it's going to do anything at all. So keep an eye on that. There's one commodity to watch really closely, folks, and that's November beans at the 642 level. We're trading around 648 3/4 right now. If we get down to that 642 level, that's going to be a really big ABCD on the daily basis, and it's also going to be a 1.618 expansion. So keep an eye on that. That would be something you wouldn't have to risk very much at that point. And if you wanted to find an oversold market, boys and girls, this is one. Because just back on Memorial Day, if you remember, we were trading at 10.60, and now we're $2.20 a bushel, under that. And as Simon Only has said to me several times, this is why farmers hedge, because if they didn't do that, they didn't make any money this year. And almost 95% of his customers did do that. And of course, the other 5%, they make so much money in other areas that it really doesn't make a whole lot of difference to them on a longer term basis. But, we're probably going to have some type of a scare in the grain markets. I mean, it's not going to be related to these tariffs, because that just keeps pushing the markets lower. but there's going to be a spot here pretty soon where the market's going to say, hey, we've had enough, and they're going to have to eat anyway, which they are going to do. But because of the news, you get these markets, pushing down, unbelievable. Here again, we've got the Dow Jones selling off, the NASDAQ going straight up, and that's a perfect example of, you got 20 stocks in that NASDAQ, and it just takes a few of them, to get moving, and that's really all you need to do is to keep an eye on that. So we'll watch these, but I think the safest thing to do, folks, is probably to wait till Monday, because if the market's higher in these grains, it's going to give you a chance to buy them, because the longs are so scared that as soon as the market starts to sell off just a tiny little bit, they'll panic, and that'll give you your retracement level, to look at to see if that's going to be the place, to watch it. Let me take a quick check here of the Christmas corn, because that's one that we have a really strong interest in, because we've got down to that level of that 352 was the number we were looking for. The low yesterday that we got was 352 3/4. We're almost there again. So there again, if we break much to this level, the 1.61, let's just do that right now since we have the chart up right here. Let's just pull this up and just show you folks what we're watching, just for if nothing else, educational purposes. But you'll notice the 1.618 expansion. Let's get this up here, get it into the room here so everybody can see it. I'll take a look at the hogs in just a second, Ruby. So as soon as we get finished with this Christmas corn, we'll take a look at this, because the hogs eat the corn. But we have that big ABCD down there at that 348 level, and that 1.27 ABCD comes in at 352. We've been to 352 3/4, so it's really close in the corn market. So let's take a quick look here. What we'll do, Ruby, is we'll look at October hogs first, because those are the ones that are probably getting the most action. Let's do August. Let's do August hogs, and then we will see how the rest of them are doing. Because you'll notice here that we've had a pretty big break now here in the hog market these last couple of days. Just get this up here. This one we had Rich Anderson on. He was talking about this, and you can see, whoa, just a second here. We've had a little bit of a technical difficulty. Give me 1 second here. Wow, what a mess up this is. I got a bad price in here, folks. Let me correct this, and there we go. Oh, how did this happen? Wow, I never seen this happen before. All right, let's get this hog chart up. We're really close to a bottom here in the hogs, folks. Let's just get this up here so we can take a quick look at it. We're trading at 68 and change here. Oh dear, let's get this up and running here. There we go. There we go. And we have a big ABCD 1.618 expansion down here at this 68 level. So this is one that I'd really take a look at. You're down 6 days in a row. So if you want to look at something for value, keep an eye on this hog market, because here again, that's one of the big things for the tariffs is the fact that China is not buying as much pork, which they're not going to stop eating over, folks. They got 1.5 billion people, so they will eat. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I wanted to go over those hogs a little bit. If you look at the December hogs, those are the far out December. You'll notice that we've had a pretty big break here. Part of that, if you'll notice, back in June when they had the tariffs put on, they were trading at around 60. We dropped almost, dropped 15 cents per pound in hogs. So that's a lot. That's 30% of their value. Notice that when they went through that double bottom, that was a really, really strong indication that they had a high probability of going lower. And you notice they broke and they rallied back to that double bottom one more time, and then they've dropped. Now today they're up, so that tells us that maybe this bottom that we were looking at in the August hogs and possibly the December might be coming pretty close in here, maybe similar to what we're possibly looking at for wheat and also for corn and also for soybeans. But that's still a little bit early to see if that is going to be the case. So we'll pay particularly close attention to it, and we'll see if that's going to be something that's going on. Now, the crude oil keeps breaking. We talked about that. It looks like, hold on here one second. We were talking about the crude oil market, really going down. And if we were looking, if you remember from Monday's show, we were showing you the divergence that we were having between heating oil and crude oil and gasoline. And that was a big indicator that, this market was really in a spot getting ready to break. And that's, of course, what we've really done. And yesterday they had the news out about the oil, whatever it was, oil stocks or whatever it was, and that pushed the market down. So we're now down, better than $5 a barrel from our highs. And we believe that we're heading down towards that level of around $66 a barrel. That's what I would think the first level that we would be watching to be the good spot to take a look at. Anyway, if that's going, let's just put up this crude oil because this is what we had happen on Monday. And you'll notice we made that 135 pattern, and now we've broken down. We're below $70 a barrel now, and it looks like we are heading down a little bit more. I would think 66, that's the old high level from 6 months ago. That might give us some really, really strong support, to hold that market at that level. But that, that's just my assumption looking at on the charts, because I don't know any more than anybody else where it's going to go. I'm just looking at the charts, trying to determine what the supply demand might be at that level, and that's all I'm looking at. Now, if you'll notice here, since we've been started trading in the last 15 minutes, the Dow Jones Industrial has dropped 80 points, and the Nasdaq has rallied 25 points. So you got a bifurcated market here, folks. So sort of pay attention to it as you look at some of these things, because it's going to be, it's really a two-tiered market. We've been saying that all along. And, if you look at that New York Stock Exchange Index, we'll bring this up here to let you take a look at it. You'll see that the Nasdaq is just totally different than the market, and this is than the regular market. And this is what happened in 2000 when we had the dot-com bubble. The Dow topped in January of that year, and it wasn't until March 24th that we topped in the Nasdaq. So this might be the same type of a thing here, because this is what's going on. We did the same thing in 2007, 2008. The Nasdaq continued higher for a little bit, whereas the Dow Jones had topped a little bit earlier. The longer-term pattern in the in the New York Stock Exchange Index and the Dow Jones is still bearish. It's just they haven't even approached those old highs at the Gartley levels. So I don't see any. I mean, this is just the news coming out and the market's reacting to it. That's pretty much, what we're watching here. So we'll see. Mr. Z has just told us that Amazon just hit 1769. It should hit 1776 because that's a big number in the United States. So it'll probably be there in just a few minutes. Another new record. So, and Facebook has made new highs. So some of these stocks have gone, much higher than what those patterns were pointing to, but that's the way it goes. Sometimes they go exceed, what you're looking for. There's nothing else you can, really look at. Other stocks, like I don't believe Apple has made new highs as of yet, but Facebook certainly has, Netflix certainly has, and Amazon certainly has. So we'll see. I don't believe Google has, but we'll have to double check that a little bit. We'll see what is going on. Steve Rhodes is telling us 1697 is the red line in the sand for Amazon. So that's not, well, that's only when a big stock like this, that's about 60 bucks away. Oh, that's for the Russell 2000. Thanks, Steve. I thought it was for Amazon. Okay, let's move on here and talk just a little bit more about the grain markets and the fact that where we are over this solar eclipse. I believe that we're very, very close to a bottom in here. It's the amount of money that you have to risk. I think the risk here on December corn is very, very small. It shouldn't get below the 348 level. We're trading around 353 right now. So that's basically what your risk would be in the corn. My premise is I'm going to wait a day only because of the fact that the news coming out can make these markets move quite a bit, and we'll see. Marshall's asked to take a look at the bonds and notes. Marshall, they look bearish to me. Interest rates look higher no matter what you're looking at. Let's just take a quick look at the bonds. As we started the week, which we were bearish, it still started to go down. And you'll notice here, when we get this up here, we started the week around the 146, and we're below 145 now in the 30-year. And the notes still look very, very bearish too. So this market should be getting ready to tell us that interest rates are going to go higher. Whether that has anything to do with the stock market at all, folks, it really hasn't had much to do. Remember that the Federal Reserve just reacts to what's going on. They're not really making policy. They like to think that they are, but the market's actually making the policy. By the way, I have another guest coming in here in the next week or two. His name is Dr. Lawrence Ball from NYU. He's written a new book called Lehman Brothers and the Fed, and how the Fed orchestrated the collapse of Lehman Brothers in conjunction with their favorite group of traders at Goldman Sachs. But we'll have him on to talk to us about that when he's available. He's already agreed to come on. Just a question of getting the time to have him put on, and we'll see what's happened. We'll have our good friend Bill Meridian on next week, and also Stan Harley will be our guest next week. So we'll have those on, and then we'll be able to ask them some more questions. The Let's just double check here what the market's doing here. The stocks, the Dow's backed off a little bit, about 100 points from the high, but still up on the day. NASDAQ is still leading the pack. And what else? Gold is up, $5 off the low, which isn't really very much at all. So we'll see what's going to happen with some of these other things. But the grains are doing very little, still down, but not turning. But I think we're close. And I have to go by those numbers that we're looking at for these lunar cycles. But this is what I would think offers really good value. It's just a question of, being safe here, because you never know what's going to come out of Washington or Europe or anywhere these days, or even China. So we'll have to pay attention to some of these things. We're going to take a little break here. We'll come back. We'll wrap up the show. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to take a look at the daily chart of silver. As you can see here, looking at this over the past 18 months, we have a big ABCD pattern that comes down to the 1510 level. We hit lows 1578 today. We're up about 15 cents off of that. Now, we did take the lows of last week out by 4 cents and, of course, didn't go anywhere. So, we're right over this lunar cycle, this solar eclipse. So let's let's really take a look at. It's not a lunar cycle, excuse me. Well, it is a lunar cycle because it's a new moon, but it is the solar eclipse also. So let's pay attention to that, because and with perigee, this should make the market turn, but whether it does or not, remains to be seen. Because if we get that down to that level at 1510, boy, that would be the time you want to call Sister Mary Perpetual down at the old Widows and Orphans farm and let them start loading up, because I think that would be a really great buying opportunity. That happens to be a 78% level on the long-term weekly chart on silver, going back the high that we made back from 2011. So this is 7 years ago, so that could be a 7-year low if we get down to that level. And that's equivalent to that 16 level per ounce in the gold that we're potentially looking at. So I don't know about backing up the truck, but you might get the wheelbarrow out, Tucker. That's basically what we're keeping an eye on. So remember that the news follows the trend here, folks. So, just because news is out there, be really careful, because these markets are not acting very, very bearish, at least not yet. Maybe this cycle high coming in could mean something, but right now I would say, just pay attention to what's going on, because there's some pretty smart people out there that have not panicked. And, follow the money, as they always say back in the old days of Bernstein and Woodward. So we'll see if this keeps going on with this tariffs and stuff. But, it's not going to change much. We're still going to be here tomorrow, God willing. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!